So for the specific reserve, the accounting treatment is we will distribute excess reserve over the actual liability among the old partners in their old ratio. So accounting journal entry will be specific reserve account debited to whatever the claim or whatever the actual liability is there. We will transfer that amount to that claim or provision for actual liability, and rest of amount we will transfer or credit to the old partner's capital account in their old ratio. Workmen compensation fund or workmen compensation reserve created out of the firm's profit to pay the compensation to the employees. The same way, another specific reserve is investment fluctuation fund. This fund is actually created out of the firm's profit to meet out the loss due to fall in the market price of the investment. If investment market price falls, then the loss due to fall in the market price of the investment will be meet out by this investment fluctuation fund. So at the time of reconstitution or admission of a partner, um if this investment fluctuation fund is given, then we have to first check is there any fluctuation in the market price of the investment. And that fluctuation, if it may be that fluctuation can be of positive nature, like investment is having a book value of 1 lakh, and in the market and at the time of admission or reconstitution, the value of investment is 1,50,000. In that case, that fluctuation is a positive fluctuation. There is no loss at all, because market price is more than the book value. So that investment fluctuation fund has no utilization, so it should be written off. The full amount of investment fluctuation fund will be written off among the old partners in their old ratio. But if the fluctuation is negative, for example, if the investment book value is 1 lakh and at the time of admission or at the time of reconstitution of partnership, the market price of the investment is 80,000. So there is a fluctuation, there is a negative fluctuation, there is a fall in the market price is rupees 20,000. This fall in the value of fall of 20,000 in market value of the investment will be compensated by this investment fluctuation fund. And if any amount left in investment fluctuation fund, then that will be distributed among the old partners in their old ratio. So you can understand by when with the example. One illustration I have taken to clarify about the treatment of workmen compensation. So this question says A, B, and C are partners sharing profits and losses in the ratio of 2:2:1. Right? A, B, C were the partners, and the old ratio is 2:2:1. Now they have admitted D for one fourth share with the effect from the 1st April 2017. An extract of their balance sheet as at 31st March 2017 is as follows. So they are admitting D for one-fourth share, right? And at the time of admission, this situation is given. In their balance sheet, liability side shows workmen compensation reserve 80,000, and they have given you these four situations, right? So first situation they have given, if first situation is if there is no other information, like above information is given, that is they inform you that A, B, C were the partners and they admitted new partner as D for 1/4 share, and they have given extract of balance sheet, and in balance sheet liability side, workmen compensation reserve is given 80,000. Apart from this, no other information is given. No other information means there is no information about what is there any actual liability or not. Definitely there wouldn't be any actual any claim or liability towards workman compensation. That's why nothing is mentioned. So if case one I'm taking, if there is no other information, so if there is no other information means there is no liability towards workman compensation. So whole amount of workman compensation reserve will be distributed among the old partners in their old ratio. Old partners are A, old partners are A, B and C, and their old ratio is 2:1. So this 80,000 will be distributed among A, B, C in their old profit sharing ratio 2:1. And the journal entry will be workmen compensation reserve account debited with 80,000 to A's capital account, to B's capital account, to C's capital account in their old profit sharing. This 80,000 will be distributed among A, B, C in the ratio of 2:1. So for if you are calculating A, then the amount will be 2 by A's share is 2 by 5 multiplied by 80,000. So if you calculate that, this will come, if you divide it, 5 ones are 5 6 are 16,000 multiplied by 2 is 32,000. In this way you can calculate it. So workmen compensation reserve account debited with 80,000 to A's capital account, to B's capital account, to C's capital account. And the narration is workmen compensation reserve credited to old partners capital account in their old profit sharing ratio. Now I'm taking second case. Second case, the situation is same. The second case, in second case they have given you situation if a claim for workmen compensation is estimated 50,000. So this information would be given with the as a adjustment at the time of admission of a partner. So what will be the accounting treatment? So if you go through, we are having a reserve of 80,000, workmen compensation reserve of 80,000, and the actual liability towards or claim towards workmen compensation is 50,000. So out of this 80,000, 50,000 will be utilized to meeting out this claim, and rest of 30,000, that is excess over actual liability. How you will get the excess? 80,000 we are having a workmen compensation reserve minus 50,000 actual claim, so the remaining is 30,000. This excess 30,000 will be distributed among the old partners in their old ratio. So the journal entry will be, as I told you, workmen compensation reserve account debited with 80,000 to claim, or provision. Right now you will write provision for workmen compensation claim account. In this account we will, because this liability is not given in the balance sheet, this is you get to know at the time of admission. They have been given as an adjustment. So you will create a new liability. Increase in liability should be created. So the new liability name is to provision for workmen compensation claim. So it should be credited with 50,000, and rest of 30,000 will be credited to the old partners in their old ratio, and that is 2 is to 2 is to 1. So 30, if you calculate it, 30,000 for A, amount is 30,000 and A's share is 2 by 5. So 5 6 6 2 12,000. So in this way you can calculate it and you will credit it. Now I'm taking the third situation, third case. If a claim for the workman compensation is estimated at 80,000. So in the balance sheet, workman compensation reserve is given 80,000, and in the adjustment as a additional information at the time of admission they have given actual claim is 80,000. So total reserve will be utilized in meeting this claim of 80,000. So nothing has been left, or there is no excess over actual liability which can be distributed among the old partners in their old ratio. So at the time of admission, we have to pass a journal entry that specific reserve, that is workman compensation reserve account debited, to actual liability which is informed as additional information. We will create a new liability. So increase in liability should be created. So provision for workman compensation claim account should be created with 80,000. Now last situation, other information are same, and additional information they have given. If a claim for workman compensation reserve is 1 lakh, at this situation, at this juncture, workman, you are we are having a workman compensation reserve of 80,000, but the claim is of 1 lakh. Here the reserve is insufficient to meet out the full claim. So distributing among the old partners is out of course, and there is also a loss to the firm because there is a new liability of 1 lakh, and this 1 lakh liability can be meet out by workman compensation reserve. It is that can be meet out only 80,000. So rest of 20,000 is a increase in liability, and this increase in liability a loss for the business. For that we will use revaluation account. So the journal entry will be workman compensation reserve with 80,000 and loss due to new liability, that is 20,000. So total claim is, total liability is 1 lakh. Out of this 1 lakh, 80,000 liability can be compensated by the reserve, and rest of is purely a new liability, and due to new liability it's a loss for the business. For that we will debit the revaluation account. So this is the journal entry. 80,000 workman compensation reserve account will be debited with 80,000. Revaluation account debited with 20,000. To provision for workman compensation claim is 1 lakh. And this loss will ultimately shared by the old partners. Revaluation account is showing debit balance. This loss will be transferred to the old partners capital account in their old ratio. So this is right now showing debit balance. For transferring it we have to credit the revaluation account and debit the old partners capital account in their old ratio. Calculation you can see it. 20,000 amount should be distributed among the old partners in their old ratio, that is 2 is to 2 is to 1. So if you calculate for A, 2 by 5 multiplied by 20,000. So 5 fours are and 4 twos are 8,000. So this is 8,000 given, right? I hope everything would have been clear to you. Now one more example I'm taking illustration. P and Q are partners sharing profits in the ratio of 3:2. They admitted R for 1/4 share. On this date, General Reserve appeared in the books at 1 lakh, out of which 25% is to be retained as provision for workmen compensation claim. So, in this question, they are saying that P and Q were the partner, P and Q old ratio 3:2. They are admitting R is a new partner and he is coming for 1/4 share. So at the time of admission of a new partner, they are giving you information that General Reserve appeared in the books. General Reserve, that is in the balance sheet, it would have it is showing balance of 1 lakh rupees, out of which 25% is to be retained for provision for workmen compensation. So out of 1 lakh, 25%, out of this 1 lakh, 25%, that is 25,000, will be retained for workmen compensation reserve claim. Rest of 75,000, excess over actual liability, that is 75,000, will be will be written off among the old partners in their old ratio. So the journal entry will be General Reserve, because General Reserve is having a credit balance, so while writing off it should be debited. General Reserve account debited with 1 lakh. To provision for 25% you will transfer to the new liability. So to provision for workmen compensation claim 25,000, and rest of 75,000 will be distributed among P and Q in the ratio of 3:2. We can check it. 75,000 excess amount, we are having excess amount, so for P share is 3/5. So 5 ones are 5s are 15,000 multiplied by 3, 45,000. So we can check it. P was credited with 45,000 and rest goes to Q. Now next question, investment fluctuation fund. It's a comprehensive illustration. In this concept you will use in solving the long questions or short questions. It can be asked in 1 mark, it can be asked for 3 marks, and it can be asked for 6 marks, or it can be asked for 8 marks. That can, when it is asked for 8 marks, then definitely it is one of the part of the question. So the question says A, B, and C sharing profits and losses in the ratio of 3:2:1 decided to admit D for 1/5 share with effect from 1st April 2017. An extract of their balance sheet as at 31st March 2017 is: on the liability side, IFF investment fluctuation reserve is given 30,000. Investment on the asset side shown 5 lakh. So first case, if there is no other information, means at the time of admission apart from balance sheet, there is no information given about the investment. So it is assumed that investment is having the same value in the market what it is showing in the on the asset side, right? So in this case, if there is no information is given, it means there is no liability towards fluctuation of in the market price of the investment. So this investment reserve will be distributed among the old partners in their old ratio. So the journal entry will be investment fluctuation reserve account debited to A's capital account, to B's capital account, to C's capital account, and the ratio is 3:2:1. So we can check it. For A share, 30,000 multiplied by 3 by 6, 6, 3 ones are 3 twos are 2, 15,000. So A should be credited with 15,000. In this way you can calculate for B and C also. Another case they have given, case 2, if the market price, if as a additional information they have given at the time of admission, if the market value of investment is 5 lakh. So market value is 5 lakh and the investment book value is in which is given in the balance sheet is 5 lakh. So they are same, there is no fluctuation. In this case, this 30,000 will be transferred, or this 30,000 will be written off among the old partners in their old ratio. So for case 2, the same journal entry you will pass, right? Now third case, if the market value of investment is 4,82,000. Now check it, book value is 5 lakh and market price is 4,82,000. If you deduct from this book value, deduct this amount from the book value, if you deduct this 4,82,000 from this 5 lakh, there is a fluctuation of 18,000. So this 18,000 loss due to fluctuation in the market price of the investment will be met from this amount 30,000. So out of 30,000, 18,000 will be utilized for fluctuation in the investment, and rest of 12,000, 30,000 minus 80,000, 12,000 excess over actual liability will be distributed among the old partners in their old ratio. So investment fluctuation fund account will be debited with 30,000. Out of this, so investment value is decreased by 18,000. For that, decrease in asset should be created. So to investment account 18,000, and rest of 12,000 will be distributed among the old partners in their old ratio, that is 3:2:1. Another information case, if suppose if the markets, I'm taking the case number 4, if the market value of investment is 4,55,000. Now check, book value is 5 lakh and in the market price become 4,55,000. So there is a fluctuation of 45,000, which is a negative one. Total fluctuation is 45,000. To meet out this fluctuation, to set off this fluctuation, we are having only 30,000 reserve. Means we will have actual loss of 15,000, right? So distributing among the old partner is out of course, out of question. Nothing is going to be distributed among the old partners in their old ratio. Even we are having a loss, that loss will be borne by the old partners in their old ratio. So journal entry will be investment account fluctuation. In the fourth case, I'm talking about fourth case, investment fluctuation reserve account debited with 30,000, and the 15,000, because fluctuation is of 45,000. So out of this 45,000, 30,000 met by this. So investment fluctuation fund is debited with 30,000, and rest of 15,000, this is a loss. For loss in decrease in asset is a loss for the business. So actual loss due to decrease in market price is to be debited with revaluation account. To investment should be decreased by 45,000, right? So this is a journal entry for investment fourth. And now this loss which you have debited in the revaluation account of 15,000 will be transferred or borne by the old partners in their old ratio. So it is having a debit balance, so it should be credited, and old partners should be debited in their old ratio. Now last case. If the market value of investment is 5,24,000, so book value is 5 lakh and the market price is 5,24,000. It means there is a fluctuation, but this fluctuation is positive one. Means investment price is appreciated by 24,000. So this is a income, this is a profit for the business because investment price has been increased. And so there is no negative fluctuation, so this 30,000 will be distributed among the old partners in their old ratio, and this 24,000 which is a income for the business, that will also be distributed among the credited to the old partners in their old ratio. Now see how it is. So investment fluctuation fund reserve will be distributed among the old partners in their old ratio. Now investment is increased by 24,000. So and this increase in investment is a profit for the business. So profit should for this revaluation account will be credited, and this income should be distributed among the old partners. It is having credit balance, so it should be debited, and old partners capital account should be credited. Right. So that's all for the today, and I have given some questions. You will solve it. Thank you.